A strong AI governance system has mainly three essential components: transparency, accountability, and adaptability.
Last thing you think about is documenting things and, like keeping the clean documentation because you just want to build a product and, change the world.
More AI doesn't mean better AI. Are we optimizing just for profit or for fairness and for governance as well? Compliance is the minimum bar.
Hi everybody, and welcome to another episode of the Curiosity Code podcast. Our guest today is Deniz Çelikkaya, a leading voice in AI risk assessment and technology law. As a partner at ARC law firm, Deniz helps fintech startups and high growth companies secure funding and design scalable, compliant AI systems. Her work at Revisor developing AI governance tools aligned with the EU AI Act. We'll be talking a lot about that stuff, along with her mentorship of startups navigating regulatory challenges, makes her a key expert in balancing innovation with responsible AI use. Deniz, welcome to the show.
Hi, Alex. How are you?
Yeah, doing great. Let's just dive in. In your opinion, what are the main components of a robust AI governance system to ensure compliance and ethical AI development, and how can fintech companies mitigate risks, particularly regarding algorithmic bias and data privacy?
Great question. So I believe AI governance in finance is really, really important, especially when it comes to bias and data privacy, particularly because financial data is very sensitive and it can carry biases to other sectors that are not financial as well. And I would like to start this podcast with this example because I believe it will really draw people's attention to this important matter. There are some cases where financial data is being used in criminal justice system to predict a person's criminality.
Mm-hmm.
There were studies carried out where an algorithm labeled a person as high risk because they got a lower credit score. So you can understand how financial data is important and how it can affect many, many different areas of our life. Putting that example aside, and since I got your attention now, I would say a strong AI governance system has mainly three essential components: transparency, accountability, and adaptability. For financial sectors, transparency really ensure that AI decisions are explainable. In fintech, if an AI model denies a loan application, a credit application, the customer and the regulator should understand why. Accountability means having clear responsibility for AI decisions. This would include compliance teams, risk officers, and even AI ethics committees or AI governance committees within a corporate structure. And adaptability would mean it means that AI risks evolve. So also the governance must be dynamic and it shouldn't be static. To address bias, fintechs should regularly audit their models particularly with diverse data sets, and conduct fairness assessments. I would like to give an example here, the famous example of Apple Card, where a husband and wife together, they applied for a credit limit assessment, and they had the same assets, same everything, but where the husband got a higher limit, the wife got a lower limit, and it really upset people, understandably. And for data privacy, I think fintechs must ensure data minimization. What I mean by that, collecting only what's necessary. And it can also mean that using even synthetic data. A lot of fintechs are now opting in for synthetic data because of the sensitive nature of financial data.
Yeah, it's an interesting example about the Apple Card.
Yeah.
Especially in the context when you actually living with that person. Okay, why do you get it? You work a lot in UK and Turkey markets, right? So beyond regulatory differences, what cultural or social factors in the UK and Turkey significantly impact the perception and implementation of AI ethics with fintech?
We can say Turkey and UK are culturally very, very different, right?
Yeah, that's
And
an interesting case.
it is an interesting case. And we apply ethics to AI because AI, unlike traditional technology, has human-like capabilities. And regulation is not, it cannot change fast enough to
Mm-hmm.
catch up with innovation. That's why we use ethical rules, and ethics are shaped by cultural perspectives. So what I've seen in the UK, the discussion mostly focus on data protection and fairness, and it is usually aligned with GDPR principles. And fintechs in the UK emphasize more on compliance-driven AI governance.
Yeah.
And in Turkey, AI ethics is more influenced by trust in technology and regulatory flexibility, let's say that. Um, and there's a stronger emphasis in Turkey on human oversight on AI decision making. The financial market in Turkey is heavily regulated, not AI, but financial market is.
Mm-hmm.
And what I've seen by my talks with UK banks and Turkish banks, although they had these kind of differences with compliance, Turkish banks are more eager to comply with EU AI Act than the UK banks.
Oh, really? Why? Why
Both
that?
countries are both countries are not part of the EU. Uh, I don't know why. I would believe Turkish banks are very prone to innovation. They would like to
Hmm.
catch up with UK and EU market, so they just want to comply first, so they can catch up faster. While in
Hmm.
the UK, I believe, while in the UK, I believe they are not, they are waiting for UK's perspective on AI to become more clear.
So just absence of solid AI governance, and they kind of waiting, don't want to spin the wheels
Yeah.
uh, in the direction that's not clearly defined by the government yet. Um, I assume it's also because of Turkey ambitions. I mean, long-term ambitions to be more integrated with EU, and UK kind of step back from that direction. Maybe
Correct.
that's the reasons, but it's interesting. Let's change a bit the direction of the conversation. You advise startups and scalable compliance structures. What are the key differences in the AI governance needs between early stage fintech startups and more established companies? Um, and how can startups build a solid foundation for responsible AI development from the outset?
Great question. I think the biggest difference is coming from priorities, right? Startups usually they don't have the funds,
Yeah.
while scale-ups they do have the funds. And startups tend to put compliance and all the legal obligations to the last. They would like to focus on innovation first, while scale-ups they are trying to not get fined. So I believe startups need to build ethics by design into their AI from the outset because they often lack the compliance infrastructure of larger firms. So
Mm-hmm.
they can use automated risk assessment tools to flag potential ethical issues early. So they won't, get fined later, or they can comply with the market earlier. While established fintechs, they have legacy systems and they have a greater regulatory scrutiny. So they focus on continuous auditing and more like a compliance driven governance structure. I think one of the biggest challenge for startups because they lack of funding and because these all new laws are being thrown at them, uh, they just don't know what to do. They don't have the funds, like I repeated, they are just falling behind the market. They are unable to put their products, and with the EU AI Act, they can potentially not be able to put their product into the EU market. But if they don't put their product into the market, how will they able to raise the funds
Right.
to actually pay their lawyer to help them comply with the laws? And they often use, oh, let's say, off-the-shelf AI models,
Mm-hmm.
like third-party providers, and they also introduce bias and compliance risk. So I would say from the get-go, startups need to build ethics by design, and compliance should start from the beginning.
Yeah, I'm trying to put it back on the shoes of the founders, because we at Product Era, we built lots of different solutions, AI powered solutions, and I've come across different cases, and in most cases we stay at the app level, so we use, like you said, like off the shelf language models. I'm trying to understand what in practical ways would that mean, like building the product with ethics by design. Have you seen like successful cases of startups, like scaling with that mindset, and what in practical terms that means for them?
So AI governance is a very new field. I wouldn't say
Mm-hmm.
I've seen successful cases yet, but this doesn't mean they are not doing anything, or
Mm-hmm.
this doesn't mean that there is no one who is implementing ethics by design. There are definitely new startups who are trying to do things from the start in a good way. Um, I would say data provenance is really important, which means knowing where the training data comes from. Start
Right.
with that. That's very simple. Just know where the training data is coming from. Document that, and then document every process of auditing, or like fine tuning your model. If you just start by documenting your processes in a clear way, the compliance process will just run much, much smoother in the future.
Yeah, it's an interesting opportunity to be solved, problem to be solved by future startups, actually, because when you start a new venture, last thing you think about is documenting things, and like keeping the clean documentation, because you just want to
Yeah.
build the product and change the world. That's what most of the founders usually busy with. So it's interesting to see how this direction would evolve and what kind of product offerings will be on the market, so that founders can actually focus on bringing the value to community, to the market, versus thinking about all the audits, document trails, and everything that you need to keep in order for future potential audits and be compliant. Um, I think one of the things that we can explore. So you mentioned that, yeah, we cannot really we don't see any successful cases yet, because it's such a young direction. But what about mistakes, or that you've seen and came across throughout your experience, companies that implement AI governance and something wasn't done quite well, and maybe we can chat about significant consequences that you've come across out of these cases.
Perfect question. I love to talk about mistakes. It's my favorite topic, not just as a lawyer, but as an entrepreneur myself as well. We learn from our mistakes, right? So I think it's really good to see examples like this and talk about the risks. And people think that AI is not really affecting our lives. It is affecting our lives. It's just not. We don't really hear them much on the news as an effect of AI. But let me just start with examples. So I think the biggest mistake is treating AI governance as just like one-time compliance task
Mm-hmm.
rather than an ongoing process. And the biggest consequence of this, as an entrepreneur, I'm speaking, like regulatory fines are not the biggest risk. Reputational losses. I would like to give this example. It's a really sad example. A There was a company called Robinhood. There is a company called Robinhood, and it is doing like AI-powered gamified trading suggestions. And it led to inexperienced investors making some risky decisions
Mm-hmm.
without fully understanding them. And there was a tragic case involved a 20-year-old trader who took his own life because he thought he owed 730,000 US dollars. The algorithm incorrectly showed him that he owed that amount of money. He panicked. He tried to reach out to the company. He couldn't, and at the end, he committed suicide. And of course, there could be a lot of external effects that that could have like, contributed to that. However, it could have been easily prevented by bringing out like transparency rules within the company and telling the young investors how the algorithm is working, that it can make mistakes, that you need to double check, the results. And but he couldn't, and he actually committed suicide. And another example was, I believe it was in 2010, the flashcards case, and it was partially caused by AI algorithms interacting in the ways that it shouldn't, and it momentarily erased 1 trillion in the stock market. And of course, you can imagine, how it affected other traders, other companies, even for for a couple of minutes, an hour, or a second. So these are real cases that these are real cases that impact our lives. And no company should approach AI governance as one-time compliance. It should be continuous process.
When I think about these cases and that stuff, it's like you want to create an edge in your offering, so you want to have that wow effect from your consumers, saying, "Oh yeah, that's a magic," because eventually, it's essentially how we all react to AI, regardless of application. If it's feeling like magic is happening, then that's the positive outcome of user experience that these companies are creating. First interactions with ChatGPT, when you're asking a question, you get like really good answer. So then suddenly you come across these companies where they want to create the same feeling, the same user experience, but at heavily regulated industries and products that have impact on financial state and outcome of users. Yeah, and you have somehow to balance it, right? Like you said, probably make it clear in the interface that, hey, this is just a recommendation. But even such, I find it, again, I'm speaking from the developer and product and designer point of view, not from the lawyer perspective, right? So you're trying to create the user experience where you would achieve seamless interaction with the product and that constant wow effect from the user. So again, as we continue talking about it, I find more and more opportunities for professionals in the industry to work on and find very nice and elegant solutions how you can cover these cases without actually impacting the level of innovation. What is the most counterintuitive thing you've learned about AI risk and fintech that could save companies a fortune?
I would say more AI doesn't mean better AI.
That's true.
I think many fintech companies, they assume that adding AI everywhere, it would improve everything, but just sometimes like simpler systems uh work better and they are less risky.
Hmm.
Um, so I believe AI should enhance decision making and not replace business logic or human logic that already works well. If you try to adopt AI to everything, then it will create a mess rather than just working with what already works well and try to implement AI one thing at a time and see, how your system is reacting to that, how people are reacting to that, because also AI literacy is really important, even if you are using AI internally in your companies. Um, your staff should know how to use AI, not to take AI decisions as the last decision. So I call this technological leap of faith because we believe technology works perfectly. We believe the decisions of AI are perfect, but in the reality, it's not. And if you don't educate your staff on that, they will end up, um, you know, arriving at the wrong decisions. So I believe one thing at a time. More AI doesn't mean better AI.
Yeah, it's funny. You mentioned that because when you look at like what's happening in the venture and all the investment world in terms of investing into new companies, every single pitch deck has something about AI. So it's one of those times. I think I spoke about it with one of the previous guests. It's like at some point we had a few years where every startup should mention crypto. Otherwise, you won't get the funds raised. Now it's happening with AI, and I think it's because it's such a kind of closed loop that you get more and more AI just to satisfy the demand from the investment community that they want to see that creates those loopholes in a sense where AI becomes a risk more than a value delivery. Um, love it, love it. More AI. How do you say it again? More AI,
More AI doesn't mean better AI.
better AI. Yeah.
Yeah.
um, what crucial question should every fintech company address that they are presently overlooking, in your opinion?
From the company's perspective, they should ask the question like, are we optimizing just for profit or for fairness and
Mm-hmm.
for governance as well? Because many fintechs, they optimize AI models purely for profitability metrics, maximizing loan approvals or like minimizing fraud risks. Um, but they don't consider the social impact of it. For example, like if a lending AI, they prioritize low risk borrowers based on historical data, it may exclude first time borrowers who don't have a credit history yet. So ethical AI governance should include fairness constraints in model development to avoid perpetrating financial exclusion.
What are the biggest myths surrounding AI compliance and fintech that you frequently hear?
I think this is also coming from applying both ethics and law to the AI. Fintechs, they think that if we comply with regulations, we are ethically sound, while the cases they are not. Because like compliance is the minimum bar.
Mm-hmm.
Compliance is the minimum bar. It's not the goal. Ethical risks evolve faster than regulations, right? So Let me give you an example. If a early buy, if an early buy now pay later FinTechs followed existing financial laws, but still created like debt traps for
Mm-hmm.
young users, this might not be illegal, but it would be ethically questionable.
Yeah.
So good AI governance means anticipating the risks before they become compliance issues. That's how I would say.
That's extremely interesting subject. It's just sparks so many new thoughts, and I guess it's because as you said, this is so fresh, and there is no pretty much structure um, in that. And I hope we'll discover more of the subject in the coming year or years. I'd like to wrap this conversation up by talking a bit about the book you're working on. Could you tell a bit about it? What are the main themes or key insights you explore in there?
So I am working for an article that will be in a book, and I'm working on a book separately. The article will be in a book called My Data is Mine. It is funded by Euroconsumers and Google's Consumer Empowerment Project. And hopefully, my article will be presented at Venice Privacy Summit in May. And the article that I wrote about how to mitigate, or let's say, if synthetic data can mitigate bias in AI.
Mm-hmm.
And the book that I am currently working on will be about AI risk in financial services. And I will focus on three main themes. First is the unseen risk of AI in fintech. What I mean is like bias, security vulnerabilities, and over automation, which can create hidden financial risks. The second part that I will be focusing on would be how to build trustworthy AI. So I am trying to gather like practical frameworks for fintechs to ensure like fairness, accountability, and transparency. And the last point will be on AI governance beyond compliance. So why AI ethics should go beyond laws to focus on long-term societal impact and sustainability. So that's what I'm working on.
That sounds great. For the listeners who want to learn more about AI compliance and ethics, we will be posting links whenever they're available to the book. So feel free to explore more. And on that note, I'd like to thank you, Deniz, for being guest. That's been a great conversation on AI compliance.
Thank you so much, Alex. It's been a pleasure.
For the listeners, thanks again for listening, and don't forget to subscribe, hit the like button, and see you next time. Bye.